Welcome to XLR's podcast, a podcast about worldwide independent solutions for asset managers worldwide. Water investments, a suitable asset class for institutional investors. With SDG 6, the United Nations aims to ensure clean water and sanitation in all countries of the world by 2030. The focus is on improving water quality, in particular reducing the pollution of groundwater and drinking water by hazardous chemicals from production processes in industry and agriculture. Water bodies are to be protected and restored as natural ecosystems, because species loss in rivers, lakes and wetlands is increasing much faster on the land than in sea. Large parts of the world's population do not have permanent access to clean drinking water, but, more importantly, still do not have access to clean toilets, whose wastewater can be treated and disposed of safely. So not only is there a lack of clean drinking water, but it is also too polluted. For this reason, efforts have been made for many years by international organizations to make the high investment requirements in infrastructure and water technologies more attractive to institutional investors by providing appropriate investment opportunities. But what exactly does water investments mean? And what is meant by the various investment strategies and implementation methods? The simplest form of water investment available to institutional investors is initially ETFs and mutual funds. Here, most fund providers select exchange-traded utilities and predominantly companies that are involved in water technologies. It is important to note that the regional focus is often on the US and the US dollar area. Therefore, these funds are subject to the same fluctuations and volatilities as the major stock market indices. In the area of closed-end funds, water investments are mostly found in the form of global infrastructure funds, funds investing in water rights and licenses, as well as regionally operating impact funds. In global infrastructure funds, investment in water treatment and water supply are additions within a large portfolio, often in close cooperation with regional authorities and municipal administrations due to regulatory requirements. There is a functioning market for water rights and licenses, particularly in the US, Latin America, and Australia. Many indigenous tribes live in protected areas as well as reservations and can secure new sources of income by selling water rights to companies and farms. Some locally operating asset management companies have specialized in advising these tribes and offer corresponding investment programs for institutional investors. Despite high returns from the ever-increasing demand for water for industry and agriculture, it is important to note that these water rights and licenses are often tied to land rights, and it is not always possible to separate water and land rights, making fungibility difficult. Investing in closed-end water rights funds will be difficult for most European institutional investors because these funds invest regionally in the US dollar area or in emerging markets. And in addition to hedging currency exposure, allocating such assets to regulatory reporting and internal risk measurement presents significant difficulties. Some asset managers launch so-called impact funds, which use micro-lending projects in developing countries, for example, to provide people in remote locations with access to clean water. Lending is comparable to microfinance funds. In the case of impact funds, locally active specialists are indispensable. Institutional investors are therefore strongly dependent on the reliability of the reporting of the local project operators. Also, these impact funds are not designed for very large investment volumes as in global infrastructure funds. Often, lending is in the range of a few hundred to $1,000 for filter systems or water pumps. For most institutional investors, an investment in impact funds is rather out of the question with regard to the cost-to-benefit ratio. Despite all the good intentions on the part of the UN and international organizations, an investment in water projects brings with it a number of challenges in the practical implication, which must be strategically clarified internally by institutional investors. How does water as an asset class fit into the overall structure of the current asset allocation? What contribution to ordinary income and fund distributions can be expected from water investments? And what regulatory issues and liability questions are involved? With a global presence and local offices, Exalaris AG can support institutional investors in these issues, as well as in the implementation of an investment policy across the entire spectrum of alternative investments. With a network of asset managers and external advisors, we can develop suitable investment strategies with custom-fit fund structures that meet the respective regulatory and tax requirements of the investor. Thank you for joining us this week on the Exalaris podcast. Make sure to visit our website xol-group.com.